let's look at UDR. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to one of the economic signals that I call specialized real estate investment trusts. Pretty decent move here from the low. Yeah, but we've seen some pullbacks literally in every of these stocks. So United Dominion Realty Trust, they are in the luxury apartments business. So 88% from the low, tiny pullback. So here is the company's website. So yeah. Exceptional locations, stylish living. Whether you're relocating or making a lifestyle change, we make it easy for you to lease luxury apartments in some of the country's most desirable neighborhoods. Enjoy remarkable amenities, stylish finishes, premier resident services, and more. Welcome home. Yeah, this is a very, specialized, subfield within this whole real estate, the REIT business. Here is the long-term picture where we use weekly data points. So I did find these very major time cycles within which there is a tendency for there to be two smaller. So in this instance, during this declining, minor time cycle phase, we did see that there was a much more even battle here between the bulls and the bears. In this instance, we did have a clear pullback. So if you look here at the current rising phase, it's been very, it's been a bit messy, but that is due to the whole lockdown situation, which obviously would have an impact on the time cycle that has its origin way back here in the 80s. Anyway, we still do see that time cycle effect. The small time cycle do suggest weakness here heading towards mid-ish September 2022. So these are very big picture time cycles. The major time cycle, it peaks here around September-ish 2022 and reaches a low point here way into the future. Yeah. We currently have a historically very high reading on both the weekly RSI and the PPO. So here you can see the previous times where we had that signal. In this instance, we do see a pullback to the green 50-week moving average. And we are very far away from that moving average now, for sure. In this instance, we see some weakness. In this instance, we pull back to the blue 100-week moving average. Here we know we have a full-blown bear market. In this instance, with high RSI, we tag the blue 100-week moving average. And in this instance as well, we do touch that blue 100-week moving average. So basically, the current RSI and PPO readings represent high risk for the bulls. So there is that. So here you have some earnings coming in. So McDonald's, CME, and General Dynamics. So let's look at the market reaction. Let's look at McDonald's, like that. Let's see, the pre-market move. Yeah, so the pre-market move is a tiny pullback. Let's look at CME, the CME group. Then we go into the financial sector. Yeah, plus 0.51%. Yeah, let's look at the General Dynamics while we are at it. Yeah, nothing really happening there. Okay, so back to United Dominion Realty. So we do have signals that represent high risk here for the bulls. Okay, so let's go here to the daily data points. Okay, so the reading we have here on RSI is the highest reading we have had in a very long time, meaning the distance from the red 200-day moving average is, basically without much precedence. When we look at the RSI, You can see it clearly here. This is a very high signal. In this instance, we had the similar signal. We went down big. If we go back here, in this instance, it marked the high, and we did have a substantial correction. Here we tag that same level, pullback actually below the red 200-day moving average. Here we have a bit of a pullback. In this instance, we do actually march a bit higher before we do have a pullback. So basically, when you look back here, it is pretty clear that this, our daily RSI level, is obviously, historically, it's not been favorable for the bulls. That is pretty clear. When we go here to the seasonality for UDR, so July is one of the strongest months, but we are towards the last part of July now. August is the weakest month over the last 10 years, both in how frequently it closes lower than it opened, and also the average loss is the biggest. Looking at the last 20 years, it changes a bit, but August is a bit of a 50-50-ish month, but September is one of the weakest months. So August, September are not favorable for UDR historically. Looking here at Finviz, we are way above the trend channel, which historically is not a favorable entry opportunity for bulls. Looking at price targets, so the stock price is $55.21. So Wolf Research, they do actually have a price target that is slightly above, but that doesn't push us that much higher. So and here we have $45, $44, $43, $44, $42, $37, $39, $34. So the vast majority of price targets are they are significantly below the current stock price, which is bearish. Meaning people that do look at price targets are obviously not going to become very bullish on this stock with this stock price vis-a-vis the price targets. So those, they are like out of the picture. And then we go to SACS, number 3 hold, basically like in the middle. D value score, C growth, B momentum. So mixed value scores, but nothing really that is exciting. It's certainly not for the bulls. The style scores are not like roaringly bearish either. Industry rank, bottom 31%. Yeah, that is more mediocre, which it could become more favorable for the bears. The dividend is 2.63%, so this is a REIT stock, hence there is the dividend to take into account. Then again, when this stock do have pullbacks, they are significant. So if we take this pullback here as an example, this was all of a sudden approaching 19%. And if we take this one here, not that big, but approaching 13-ish%. Hence, the pullback could be significant to make up, for any kind of dividend risk. So yeah, if I were to sum up my take for UDR, United Dominion Realty, so the technicals are pretty clear. This is a high-risk situation for the bulls. It just is, which means that it could become favorable for the bears. The fundamentals are overall bearish. The seasonality was more clearly, bearish. Taking all the evidence together, it is much easier to make a bearish case for UDR than a bullish at this point. And that's the key thing. It is all about, at this point in time. If we were looking at this chart here, the thesis would be different. In this instance, we have a double bottom. And most likely the fundamentals looked different at this level here. Same thing like over here, you have a double bottom. So double bottoms historically have been very, very, very favorable entry opportunities for UDR. So whenever you present, a directional thesis, it is about, the context, specifics, time when you analyze it. Because the only thing that matters to you is what is the most likely future direction of the security.